Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow by looking at the commitment of traders, so what the non-commercials and the biggest speculators in the market are doing, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong area of previous monthly demand and support, which is acting as support here, again here with this rejection to the upside, one last time with the creation of this green candle, and now that the market is testing once again this area, we could expect some bullish price action to be created away from this zone. Dropping down on the weekly, what do we have? Now, from a weekly perspective, we can see a similar scenario. In fact, what we can notice is that the market created this huge wick here when it went and tested this zone. What this shows is that very strong weekly demand and support was found at this area, preceding this rejection to the upside. After that, the market melted right down to retest once again the exact same area. So in a situation like this, we could expect more bullish price action to be created away from this zone. Dropping down on the daily time frame, what do we have? Well, from a daily perspective, price action is quite simple. We can see how the market at the moment is breaking above an incredibly strong level of previous daily supply and resistance, which now that it is getting successfully broken to the upside, this previous resistance is supposed to be turned support. So what we could expect at that point is a retest of this previous resistance turned support before then getting a potential rejection to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the euro, what we can see is that in the long term, we had a huge increasing of the net positions. We went from having minus 47k net positions with way more shorts than longs. In fact, we had 249k shorts compared to only 202k longs, all the way up to now having 148k net positions with 233k longs compared to only 85k shorts. So we can see a huge shift from a bearish net positioning to a bullish net positioning. So in the long term, the euro is getting quite bullish. Now, if you look at the euro, you're actually already looking at EURUSD because all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking EURUSD. So if we will have a successful break above this resistance, it would be nice to have a bit more continuation, because if we get the continuation at least to this level here, which I will now show you which one it is, if we will have the continuation exactly all the way up to this level, at that point, when we will take our Fibonacci from the low to the high of this impulse, if the market actually reaches that level, we would have the 0.32 Fibonacci retracement, which would be lining up perfectly with this previous resistance turn support, which is a very common situation in the market. Because if you have a previous resistance turn support lining up with a Fibonacci level, that means that essentially you have confluence of support at that level. And after the break on the retest of that previous daily resistance turn support, that is where you have very good probabilities of seeing a potential rejection to the upside. So if we do have the completion of this impulse and correction, how we could be approaching a potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course and mentorship program completely for free. In fact, you will have the possibility to gain access to all the courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that you have the possibility to gain completely free access to the mentorship program by just following these easy 3 steps. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.